There was a major difference from previous years at last week's Commodities Talkfest in Canberra, and it wasn't the addition of an S for Sciences to ABARE, so it now comes out as the Australian Bureau of Agricultural and Resource Economics and Sciences. The difference is confidence. For the first time in years, the farmers at Outlook 2011 were smiling.
A good time to be a farmer in Australia?
Always a good time to be a farmer in Australia.
But is it the best for a long time?
No, tricky year last year, too wet at harvest time. But the summer's been good. I'm a summer cropper. Summer's been good. Drying off now, but it's still okay.
And potential for next winter?
Oh, very good, I think. I think the commodity price is in the right direction. Our dollar's probably not helping us, but still it's a great time to be a farmer.
Positive time. I've always been positive about agriculture and like to see more younger people come into agriculture with commodities buoyant at the moment with a high dollar and the projected outlooks that we're seeing here in the last couple of days with ABARE, a very positive time to be in agriculture.
Now, is it a good time to be a farmer in Australia?
It's a great time to be a farmer in Australia, Kerry. We've got lots of opportunity. We've got good prices for our grain at the moment, and it's only looking better into the future. We've got full soil moisture into the coming year, and we're excited.
We've always got droughts or floods or markets or something to look to, so it keeps it interesting.
But this is the best time for a long time.
Yes, it's been with a lot of the dairy industry sort of certainly carrying a lot of baggage in the terms of debt from recent years, us included. But looking forward, it's looking optimistic.
Oh, a wonderful time. It's been a very long drought, and exception goes out to the poor guys in Queensland and WA, but effectively the heartland has got the rains and the seasons are turning.
The best for how long?
I guess I've been in the industry myself for all my life, past uni, so I'd have to say in the last 30 years at least, but going back long before that, I live on the Darling River, or did live on the Darling River, 38 million litres going past our place per day means huge flood-out plains and lots of water and commodities going in the right direction.
Yeah, I think it's always a good time to be a farmer in New Zealand. It just depends on whether you make any money or not. So the outlook at the moment is pretty good for both dairy and sheep and beef with prices up.
If that sounds too good to be true, well, farmers rarely lose sight of reality. There are always problems over the horizon and issues to confront.
Any problems or dark clouds on the horizon?
No, the strength of the dollar continues to be an issue for us. Certainly, if it was back in the high 80s or early 90s, the dairy industry would be in great shape at the moment.
Weather.
Possible problems could be potentially around, we are unsure about what's happening with potential carbon issues, and we don't have any security around grain prices into the future, but I actually think things are generally looking pretty good for us.
Where I live, there's a few. Government regulation would be one, and mining would be two, and coal seam gas probably be three.
I mean, imports are always one of our biggest issues in the pork sector, and we'd like to see a minimisation of that. Our industry has had great leadership last year with the resolution passed with the voluntary phasing out of stalls. I see our industry taking some good steps forward to get some market share back from the imported product.
It's disconcerting, the public forum on wool, land ownership. I come here with a lot of academics saying effectively it's okay, foreign ownership is not an issue, and that EU subsidies that needed protection during drought times are no longer needed. It's infeasible. I guess my argument would be, if I put you in a sandpit for 14 years, how long would you survive?
Weather.
Putting aside the weather, according to ABARES, exports of virtually all farm produce will rise next year in volume and price. Wheat, our biggest farm export, will lift next year to $5 billion. Beef and veal exports should rise 2%. Wool is also on the up, heading towards $2.6 billion, while dairy should be steady at just over $2 billion, and wine exports will also stay much the same, our strong dollar having a distinct negative influence. Perhaps the best overall news from the Outlook conference was the forecast on the Aussie dollar. ABARES is tipping the dollar to average around 97 cents over the next few years, before moderating gradually to average 90 cents by 2015-2016. Now, the word I kept hearing at the conference in relation to that dollar forecast was courageous, and I wonder if that wool export forecast was done before the remarkable price spike of recent weeks. So let's start the price check with wool, where it's been another cracker week. The AWEX Eastern Market Indicator lifted 1.6% for the week to close above 1,300 cents. Buyers from China dominated, and China also gave the Italians something to think about in the competition for the finer wool at Newcastle. Now, the other hot fibre is cotton, and a volatile week saw strong export sales out of America push the price past $2 for the first time in a couple of weeks. Traders remain cautious, but there's also the awareness that world cotton warehouses are fast becoming empty. And another soft commodity traded in New York is sugar, where the volume traded was 37% down on recent averages. Nevertheless, sugar firmed a fraction to stay above 30 cents a pound. And about 800 miles west in Chicago, trade bounced nicely after the setbacks of the previous week. Good overall economic news landed alongside concerns about stock shortages, and hedge funds led the jump. Soybeans, wheat and corn all headed north. The May contracts are much more fluid than the closing nearby March number. Market chatter is all about supply, and there's an undertone of the drought in China. Now, locally, there's only light trading in our futures markets, with WA wheat at a premium for the current crop, but on par with East Coast milling wheat for early next year. Now, local spot markets are soft, with canola showing strength and following the Winnipeg price. Wheat fell, sorghum is steady, while that canola gain is getting back some of the recent losses. And speaking of canola, latest figures reveal the extraordinary take-up of GM crops in Australia. GM canola and cotton production in Australia has risen from 200,000 hectares in 2009 to more than 650,000 hectares last year. And on a world basis, the area planted to GM crops increased by 14 million hectares to 148 million hectares. That's about 10% of the world's croplands. Now, moving to the sale yards, and slaughter numbers are way up. In Queensland, the February figure was 307,000, the highest on record. Processors and restockers were active in a market where heifer yearling and cow numbers were down as producers looked further out. Trade cattle, Jap ox and steers all headed north, price-wise of course, and cows were also in demand. A substantial buy for lightweight steers for the live trade also put some zing into prices. Now, this has pushed the Eastern Market Indicator above $4 for the first time in several weeks, well above this time last year and the year before. Here's how this crucial indicator has travelled. That first green line is 2009. You can see about March of that year it was about $3.10. Now the 2010 blue line, and up it goes. In March of last year, the indicator was close to $3.40, and you can see that brief red line for this year, now above $4. And the lamb market saw numbers lift, but surprisingly, prices held. Mutton drifted a fraction, but that lamb price is now $1.64 a kilo above the price this time last year. And I'll leave you with the news that the United Nations has declared that world food prices are now at a record high. The UN says its food price index has reached its highest level since the measure was started 20 years ago. And on that note, that concludes the Landline check on prices.